Thank you for joining us this Friday, the 10th of June. I'm Sophia, a market analyst with Bell Direct. Well, since the RBA's rate hike announcement on Tuesday, ASX bank shares have been underperforming. The financials index has fallen 7.6% week to date as the four major banks hit multi-month lows. The fall comes as the 0.5% lift in the cash rate provoked investor fears of a sell-off in the housing market. So these concerns began in May when the rising cost of living saw house prices hit a 20-month winning streak. The RBA's aggressive take on rate increases will likely have an impact on the bank's lucrative mortgage lending business units. And the sharp share price falls this week are also likely because the rate hike was greater than consensus expectations. Morgan Stanley have said that bank shares are likely to underperform if the RBA continues to move aggressively with rate increases. Week to date, Commonwealth Bank CBA is down 10%, Westpac WBC is down 12%, NAB is down 9%, and ANZ is down 7%. The bank sell-off has driven the ASX 200 down 3% Monday to Thursday, with real estate and tech following financials as the worst performing sectors. These sectors are also quite sensitive to interest rates. Meanwhile, energy shares rallied 6.7% higher as oil prices are trading above $120 per barrel, with signs of further market tightness in US crude inventories. Taking a closer look at the ASX 200 this week, the best performing stocks were Atlas Arteria Group, ALX, one of the world's largest developers and operators of private toll roads. ALX has gained 13% this week following news that the IFM Global Infrastructure Fund has bought 15% of the company's stock. There's also potential takeover interest by IFM. And with the energy rally, Woodside Energy, WDS, was also a top performing stock this week, rising 11.3% week to date. Woodside is a producer of both oil and gas, and so its share price was boosted as oil and natural gas prices rose higher. Natural gas prices have jumped more than 33% in a month, and Goldman Sachs say that they're expecting Brent crude oil prices to average $140 per barrel from July through to September. And the worst performing stock on the ASX 200 was buy now pay later company Zip, ZIP, tumbling 20% this week to a new multi-year low. This follows the news that Apple will be launching its own BNPL platform named Apple Pay Later. Therefore, investors were selling Zip after Apple's announcement sparked worries on how it will impact direct competitors. And Magellan Financial Group, MFG, declined 14% this week following news that the company's fund under management fell 5.2% to $35 billion in May. On the All Ords, the stocks that gained the most were oil and gas company Cooper Energy, COE, Atlas Arteria, ALX, and tech company Celix Systems, SLX. And the worst performing stocks were recipe and meal box delivery company Marley Spoon, MMM, and luxury online fashion platform Satire, CTT. And the most traded stocks by Bell Direct clients this week were Insurance Australia Group, Lake Resources, Worley, Westpac, ANZ, and Woodside Energy. Clients also bought into Commonwealth Bank, Macquarie, and Fortescue Metals, while took profits from CSL. And the most traded ETFs this week were the BetaShares Geared Australian Equity Hedge Fund, the Vanguard Australian Shares ETF, and the BetaShares Australian Strong Bear Hedge Fund. And lastly, economic data to look out for next week. On Tuesday, we'll receive an update on Australia's Residential Property Price Index. Also on Tuesday, NAB's business confidence data for May will be released. And on Wednesday, Westpac will release its data on consumer confidence. Then on Thursday, the unemployment rate will be released for May. Now, unemployment is currently at its lowest level on record at 3.9%. And that's all we have time for today. I'm Sophia with Bell Direct. Have a great day and happy trading.